Hey guys, welcome back. Today we are going to solve a problem which is from December 2023, and this is from FM. Okay, we are going to see the concept of fund flow statement, and also we are going to solve one problem from fund flow statement which is from previous year question paper, right? Okay, what does that fund flow statement state? What does that fund flow actually mean? Okay, how it differs from the cash flow statement, all we see in this video. Okay, we to know the fund flow, to prepare the fund flow statement, what are all the things we require is we require how much we have earned from the operations, how much we have earned out of operations, and what's the net increase in working capital, or net increase or decrease in working capital. Okay, fund flow statement is just like a balance sheet. It will just actually tally. Okay, what are all the sources we collected money, and wherever the funds has been utilized, it should be equalized. Okay, the sources we raise and the application of money we used, it should be equalized. So that's how the construction have been done here. Okay, the statement of changes in working capital is the core area of this fund flow statement. No, why this to simply say, we are preparing this fund flow statement only to know the changes and address the changes behind the address the reason behind the changes of working capital only. Okay, what does it mean by working capital? Current assets minus current liabilities. You know the operating cycle, how long no raw material purchase to uh, sale and then debtors collection, how long the period is taking. This is actually the operating cycle. Okay, till then the actual working capital will be blocked in the assets, blocked in the stock itself. Okay, stock and particular sale itself. So to address the issues behind these areas, and what are all the things happening in the background. So all these will be addressing only if we know the changes in working capital. No, then the adjusted P&L is just like how we find out the cash flow from operations. No, there we will take only the cash related items, but here what we are taking is we are removing the items which is not operating incomes, and we are going to add the non-operating incomes. We are going to deduct the non-operating incomes, we are going to add back the non-operating expenses. Why we are doing this is to know the fund flow from operations. This is not cash flow from operations. Cash flow means whatever the cash items, no, that will only take place. But fund flow operations does not think about the cash flow and all. It just thinks about the fund flow from operations. Okay, entire profit of the business is constitute the profit from investments, and profit from business, and then sale of machinery. All these profits no will be taking place in this. What we have to do is whatever the non-operation, if it is the sale of machinery and all non-operation expenses, so investment sold is non-operating in profits. So all those income should be deducted, and whatever the non-operating expense, I want only the salary and the rent I paid for my operations. All those expenses only I need to stay back, other than whatever the expenses no like I faced a loss on sale of machinery. That is a non-operating expense. Why do I need to have it for to find out the fund flow from operations? So add back those profits, add back those expenses and all. So finally we get output of fund flow from operations. Okay, net increase in working capital or decrease in working capital we found, and one fund flow from operations we found. Directly we can go to the fund flow statement. Fund flow statement is where the money is raised, where the money used in the business. So it should be equal. It's like a balance sheet only. Okay, it actually at the end it will be equal only. So because wherever the money raised, no, that actually used into application only. Why what's the purpose of raising money? To use it in the business only, no. So it should be equalized, right? So fund from operations, whatever the fund we raised, whatever the fund we earned from the operations, no, that has to be the source of fund. Okay, and what are all the financing activities done? Financing activity we done to raise the money: equity preference, equity share, issuing equity shares, issuing preference shares, issuing debentures, taking loans, sale of fixed assets, investments. All these areas, no, we are raising money, and these are all a sale of investment area, and these are all a financing area. Okay, so these are all the sources of funds the business will get. Okay, and where we apply these funds: to repay the loan, to pay the tax, to pay the dividends, to purchase any fixed assets required for the operations. So all these adjustments, no, all these sources and funds down, that the balancing figure would be the increase in working capital or decrease in working capital. This can be a balancing figure also. Or if they have given the 2 years balance sheet, no, we can find the statement of changes in working capital as a working note also, we can easily find and we can balance. If they don't give the increase in working capital, no, we can taking it as a balancing figure. So I hope you got the clarity. So what's the sole purpose of why we are preparing this much big tables to find out the increase in working capital or decreasing, or what's the purpose, what the company is going to get out of it? See, the this is like the tank, no. In our houses we have a tank, no. Whatever the funds comes into the business, no, it's like we are getting the funds, and it's like the pipes which are flowing, which are inflow the money of we are inflow the money we have raised, and application into the business, it's like the outflow of the pipe. Okay, whatever the balance remains, no, that's our working capital. Okay, application and the sources difference is the working capital balance. Okay, this working capital denotes simply denotes that funds blocked in the current assets. Lot of funds we have blocked in the blocked in the current assets. See, there is a demand in the market for only 100 stocks, but we have produced 150 stock or 250 stock, since we have lot of funds. So that's actually no purpose. No, the annual demand itself is 100. Why do we need to produce 150 units? So these are all the no, inefficient use of excess working capital. So this should not arise in a organization. This won't be sustained for a long time. So this is where the fund flow statement importance has been arises. So if the working capital is increased in the business flow, there is more inflow than the outflow. There is only. Okay, what does this denotes? We are inflowing the lot of money into the business, but the application of money is very less. Okay, see, if there is a decrease in working capital, no, we are having a very low source of income, low sources of revenue. Sorry, we have low sources of raising funds, but we have but the need for money is huge. The need for money is less here. Okay, that's where the working capital rises. The need for money is low. That's where the decrease in working capital rises. No, funds blocked in. No, what we do if we have excess capital, we invest in the stocks and debtors only, no, so that will increase. What we have to do, if we feel like there is a lot of funds blocked in the assets, no, we have to collect the speed up the process of debtors collection and reduce unnecessary stock loading in the factories. Okay, and if it is more outflow than inflow, no, there is no application of funds, but there are a lot of money only. So we have used the we have used the working capital effectively, but the thing is, funds lot of funds freed from current assets. The thing is, what we have to do is, here we can plan for the investments or repay loans, if we have any, and then we can reduce the dependency on more on creditors, because we our funds have cleared, no, our current asset funds are cleared, we have more money in the hands, right? So that's what this denotes. And let's quickly jump into the problem. The following information provided by the K Limited. They have provided the table of retained earnings. Okay, balance of retained earnings given, net profit, tax refund they have given. All these have been already adjusted. Loss on sale, goodwill, and dividends has been adjusted. Okay, this is the adjusted net profit, but all these things are not adjusted. Okay, let's see what they have given. Plant and machinery having a written down value of, okay, 54,000. They have a written down value, and they have sold, which is a loss, and they have given the written down value and the loss on sale. What we have to do is, we have to find the sale price. Depreciation has been deducted while arriving at the net profit for the year, so they have deducted it. So add back the depreciation. And then plant and machinery were purchased during the cost of rupees 1,60,000, but the payment was, okay, it's they have, purchased the machinery by issuing the debentures to the, there is no fund flow or no nothing has been happened here. And then 72,800 debentures have been redeemed. They have redeemed the debentures, and for that we are applying the funds we have raised. Okay, so what we have done is we have to find out the fund flow from operations. No, what we have to do, the net profit after tax we have is for 6,48,480, but that is a depreciation which has been deducted from the net profit while arriving. So the depreciation has been already deducted, so add back we'll get the fund flow from operations. This is the fund flow from operations working note 1. And then there is they have given the WDV, and then loss on sale of machinery. So loss on sale of machinery and WDV given, no. So net of that we'll get the actual sale of machinery. That's a source of funds we have, so 39,900. And there is a tax refund also. This is also a fund flow for a business, so 25,470. And wherever the funds have been no, applied, the funds have been applied to pay of the debentures 72,800. And there is another dividends have been paid for 4,70,350. So we have put all the figures, and we have balancing. We have a balancing figure at application area. So we have a net increase in working capital. See, there are lot of funds are sitting inside the working capital box itself. So what the company has to do is, company has to initiate the process of speeding up the data's collection and reduce unnecessary stock. If there is any stock is if there is anything stocked in the factories without having enough demand. So these are all the things we have to understand. And there is a working note. You can see plant and machinery purchased by issuing the debentures, that make no impact, so we haven't added here. That's it. Thank you.